Welcome to Access a Trader, the #1 community for those who are committed to taking control of their trading in order to achieve success, profitability, and longevity. Thank you for joining us. Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good morning everybody. Welcome to another edition of the AccessATrader.com nightly wrap-up show, weekend update show. Hope everybody is doing well. 2024 is 2 days away from being a wrap. Hopefully, if you started this year, you're getting a little bit of feet wet. If you've been trading for a long time, hopefully you guys are hitting it out of the park. If you're just somewhere in between, right? If you're somewhere in between, hopefully you are trying to find and identify what works for you, what is comfortable and applies to your account size, lifestyle, threshold, pain threshold, all that stuff. And again, for all you guys, just a last minute announcement for all you guys. I talked about it yesterday, 2 days ago. We have last couple of days. Okay, if you are planning to join us in the webinar in January. Again, save yourself a couple of bucks. Click the link in the low. There's a half discount for the 30-day trial. Again, all it takes is 30 days to see if pivots are a right fit for you. And again, who knows? Again, we are Kenyon is picking somebody random who joins in December that is going to win a complimentary year of the PS60 workshop. So again, if you are coming aboard in January, use the next couple of days to, again, get the discount and hopefully you will win, right? So look, I always trade, playing devil's advocate. I stopped drinking the Euphoria Punch years and years ago, right? Years and years ago. The Euphoria Punch was overflowing in 99, 2000, all the way up to 2001 during the dot-com era. Never thought in a million years it would never end and everything was going to be great and I was going to retire by the age of 28. I started trading around 24, 25. Didn't work out that way, right? Didn't work out that way. The biggest issue during that time was the market was so strong that the conceivable notion of any type of backtest was you were basically throwing stones at if you even mentioned that. But during that time, and obviously I learned the hard way, you start realizing that the market is not linear. So I know a lot of you guys started trading in 2020, right? I know a lot of guys because that was the pandemic. And what you saw for the next 2 years was arguably the top 3 or 4 biggest bull market runs in the history, right? In the history of the modern day market. I'm not going back to 1929 and 1930 and the Industrial Revolution, all that stuff. I'm probably getting the dates wrong, but you know what I mean, right? And we never thought, right? You probably said to yourself, man, this is like the greatest market ever. I don't understand why people say trading is so hard. 2020 is crazy. 2021 is crazy. And then all of a sudden, 22 rolled around, right? Nothing materialistically really changed in 2022. We were coming out of COVID. People were getting back on their feet. Businesses were reopening. And for no apparent reason, for the exception of the bubble, quote unquote, the pandemic bubble bursting, the market decided to, have a bad year, right? And what the major run that we saw in 2020 and 2021 was followed by one of the worst, or the absolute worst years you saw in 2022, right? 2022 basically pretty much gave back the run, half the run, from 2020 to 2021, right? It even extended a little further down, okay? And at some point, the sellers got really, really tired. But in the process, all the people who started in 2020 and 2021 pretty much gave everything back if they were holding, just because, stocks never should have been at those prices to begin with. So a firm should have never been at, whatever it was, $300-400 a share. UPST should have probably never been at $300-400 a share, but yet people are still long from that level. And, finally, when people just couldn't take it anymore and 22 closed its books and 2023 rolled around, the sellers just got tired. That's it. They just got tired. And what followed was an absolute magnificent market, but the carnage was there. 36% decline, I believe, on the QQQs in 2022. The carnage were there. A lot of people did not rebound mentally, did not rebound financially. And then when they were basically completely done, a new wave of traders came in, right? New wave of traders came in 23 and 24, and we have this absolutely magnificent run happening, right? Absolutely magnificent run. And if you look at the scoreboard, the QQQs are up roughly 70% in the last 2 years, okay? So then kind of brings us back to the future, the lesson that we kind of keep on teaching ourselves, or, going back and analyzing, that we don't make the mistakes again. So here we are again, euphoric market, 2-year run, very, very similar for 2020, 2021. There are people sitting there right now with astronomical gains. That's all relative. You could have turned $500 into $5,000, and that's your astronomical gain. You could have turned $50,000 into $30 million. That's your astronomical gain. It's all relative. So we're kind of speaking in diamonds and donuts. But here we are again, right? The end of 2024. So I always play devil's advocate. Okay, I am not one of those guys anymore. Okay, I used to be one of those guys that believe that this gravy train will never stop. So I start looking at clues. That's what I do. And the one thing I've always been pretty good at is identifying when a potential train is coming and I'm standing on the tracks. Now, let me just start before I start this little monologue of mine, because I know a lot of people are very sensitive. 2 things I wanted to start right off the bat. I hope 2025 goes up 1,000%. Okay? There I said. I hope it goes up 1,000%. It is so much easier making money in a bull market. Everything's going crazy. Everything is gapping. You don't need to be the greatest trader in the world. Just be in the right groups at the right time with momentum. Okay? So let me just start out by saying that. But I also learned my lessons from 2020, 2021. I learned my lessons from 99 to 2001. So I kind of know what happens if you are not prepared. Now, 99% of the people watching this broadcast are probably long-term investors. So you're going to turn around and tell me and say, well, Dan, even if we have a down market, well, 2 years from now, we're going to be rough. That's fine. That's fine. If that's the case, that's the case. And, 99%, whatever I'm saying right now, it's probably going to go over your head. But for the rest of you guys who are active traders, we want to start talking about some clues. That's it, some clues. Again, I want the market to go up another 1,000% in 2025. I just want all of us to be prepared, well, just in case it's not, and history kind of repeats itself. So let's go to present day, right? So here we are in the daily chart in the present day. So far, when you look at this chart, there's absolutely nothing, right? There's absolutely nothing indicating that we are going to have a down year, although there should be a little bit of regression. Do you really think we're going to have another year of 35% gains? I hope so. But do you think that's really the case? So let's just pretend there's a little bit of regression, right? And let's say the market only goes up 12%. I know it sounds crazy. Or hell, what if this is, this is even the craziest part? What if it's actually down in the year, right? Don't you have to be prepared? And that's exactly where the topics of discussion here. So from the daily chart, you're not going to see anything that is going to say that the market is going to go down in 2025. There's nothing here that should make you worry. But I start looking at clues. And one of the clues that you want to start looking for is, number one, very, very aggressive engulfing candles. Okay. If you guys remember going back to weeks and weeks and weeks, guys, don't buy stocks off the 12th floor. If they're overstretched, leave the stretched ones alone. Leave those alone. You're going to get killed. You're going to get killed. Well, that's what happened, right? We had the J. Powell testimony, FOMC, and on 12/18, we literally gave back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 days. Okay. 12 days in 1 hour, right? That's exactly what we were prepared for and we were worrying about and all that good stuff. So now there's something called a game within a game. For all you guys who play baseball or watch baseball or love baseball, it's like you're watching the Yankees versus the Dodgers, maybe too soon, but you're watching the Yankees versus the Dodgers, and you notice like the pitcher will always throw to the first baseman, right? Because when there's a when there's a chance there's a base dealer it's going to go. That's called the game within a game. Okay, so now we have to look at the chart within a chart. So obviously, macro-wise, there's nothing, again, that's going to tell us that the stock market's going to do anything but it's what it's been doing. But now you have to look at the game within the game. Here is the game within the game, right? We had the reversal, disgusting 3.5% reversal on December 18th. We've had a little bit of a bounce back, okay, a little bit of a bounce back. And if you guys remember, on Friday, we had this really, really nasty intraday reversal. Really, really disgusting. That looked like stocks are about to fall off a planet. And here's where I start looking for clues. And I start saying to myself, well, what are the leaders doing, right? What are the leaders doing? What have they been doing? And is this whole formation now potentially in jeopardy, right? In jeopardy for a longer term view. That's what the conversation we want to have today. Okay. Number one, the leaders for the most part are still okay, right? Are still okay. Even though Apple had a pretty ugly reversal on Friday, still held the 10-day moving average. Tesla, although, it had it was having a pretty choppy, aggressive kind of, dance-a-thon here in the last couple of weeks, it still looks very, very strong, right? And you start looking at the Amazons in the world, they're holding up fairly well. The Metas of the world, they're holding on fairly well. Now, the question is, well, what happens if the bottom of the channel gets tested? And this is kind of where you want to start preparing for what potentially could happen next. Again, nobody's saying it's going to happen. We want to be prepared. And that's the whole point of this broadcast. That's the whole point of the webinar, that we're not going into the next trading day with eyes wide shut. We're going to the next trading day with eyes wide open. So going into this new year, right? And again, granted, we have a couple of days left, but going to this new year, this 509 level is going to be the difference between us having a roaring continuation bull market that started 2 years ago, okay, or restarted 2 years ago, right? Or the difference of, oh boy, is this potentially another 2022 scenario? And the reason why 509 is important, well, two things, right? 509 was the low, the 3-day low of that big FOMC reversal. And that happens to be the 50-day moving average, right? For all you guys who've been watching this broadcast for a very, very long time, you know what happens when we reclaim the 50-day moving average, and you know damn well what happens if you lose the 50-day moving average. Go back to your charts, right? Go back to your charts and see what happens when we lost the 50-day moving average in 2022. This resulted in a 36% decline. Again, for all you long-term investors, this is not a broadcast for you. Appreciate your viewership, but it really has nothing to do with you. So this 509, again, granted, we're nowhere near it yet, but this 509, write it down, tattoo it on your forehead, tattoo it on your chest, whatever your fetish is, but write down this 509 level. Any close below 509, and again, I'm hoping it doesn't happen, but any close below this 509 level could start a pretty aggressive back test. Again, that's what you're ready to be prepared for. So you're not caught off guard. You're not caught with your pants beneath your ankles. You are ready, right? You are ready. Even if you have a portfolio and you're not an aggressive shorter, you can hedge, right? 509, you can hedge your portfolio so you don't start to bleed. So you don't sit there for 2, 3, 4 weeks giving back everything, okay? Because you didn't believe that technical analysis is real. I think for all you guys who've been watching this broadcast and been with me for the last 15 years in the webinar, you kind of know how incredibly effective technical analysis is. So going into the new year, again, watch that 509 level, right? Watch the 509 level, because again, there's a lot of elements that are starting to be familiar that we had from 2020 and 2021 that we're carrying over today. The key is watch the names that ran this market up, right? Bitcoin has been going crazy, right? Bitcoin, is hanging around this 100 area. I think it's like 93, 94, whatever the case may be. But watch Bitcoin, right? If it starts coming in, look at Coinbase, right? Look how Coinbase is now starting to form a formation underneath the 50-day moving average, right? If Coinbase, and again, remember, Coinbase represents speculation money. If Coinbase starts confirming this bottom channel here, it's going to get hit. Again, represent speculation money. Look at MSTR, right? MSTR is holding on to the 50-day moving average like grim death, Okay. If MSTR loses the 50-day moving average, the trend shifts. Okay. It's not going to be a one-day thing. The trend shifts. Whether that trend shifts for 100 points or that trend shifts for 20 points, the trend that day will shift because the loss of a major demand zone is going to be very, very important. So you want to watch the speculation money names, right? You want to watch the names, the AI, the robotic, the battery names, the names that had iconic runs this year, right? The IONQs of the world, the Lunars of the world. There's a lot of them, right? I'm not going to go through the whole thing, right? Just watch those things. If they stop going up, right? If they stop going up and there's a buyer strike and you start seeing, again, other speculation darlings like the Coinbase and all those other names, they start getting soft. Guys, watch it again. Speculation money represents everything, right? It represents every bullish sentiment you could possibly have. And if you don't have speculation money coming in, you don't have a bullish scenario. So you have to be very, very important. Watch the semis, right? How disappointing was NVIDIA, right? How disappointing was NVIDIA? I caught a decent trade in the last few days on NVIDIA. Right? A decent trade. It reclaimed the 50-day, went up about $2.50, made some sales, and then it gave up the 50-day moving average 2 days later. That's not what you want to see out of a leader, right? It's not what you want to see out of a leader. And if you look at all the other semiconductor names, which ones are better, right? Which ones are better? You had AMD for the last 6 months. Again, look what happens when you lose the 50-day moving average. You lost the 50-day moving average on October the 22nd at 156. Well, the stock's at 125. Again, this is what happens when you lose the 50-day moving average. So look at AMD, look at ARM, who actually, again, reclaimed the 50-day only for 3 days. And look, as soon as it lost it, the stock went from 146 all the way down to 123. So keep an eye on, right? Keep an eye on everything that has speculation money. The key takeaway going into this new year, again, I don't expect a lot to happen in the next couple of days. Again, the market is heavy, absolutely. I'll keep an eye on Tesla. Again, like I say, both ways. But I'll keep an eye on Tesla just in case it loses the bottom of the range here on Monday for a potential move down to 413. I'm watching NVIDIA, for example. Again, the fact that it lost the 50-day, I'm watching in case it loses the 10-day moving average for a trade, a little bit of a bigger trade. There's some other names. Let me give you guys some other names. You can watch for this week. Again, I don't expect mountains to be moved for this week, but, it's very, very important to watch. On the upside, keep an eye on RKLB, just in case these robotic AI battery crazies still keep going. It's still holding very well, but definitely watch the Coinbase names to the downside. I'm definitely watching Apple. Again, it had a big reversal, held the 10-day moving average. So if it loses the 10-day moving average, I'm definitely going to watch it for a potential move down to the 20. But that's kind of where I am. I'm going to be very, very nimble for the last couple of days of the year. But guys, remember, history is the greatest teacher in the world. And if you don't appreciate what history has taught us in the past, you're going to repeat history. And that's not what we want for any of our viewers. It's definitely not what we want anybody who attends the live webinars. So that's why we are prepared. I'm not trying to be a Debbie Downer. I'm not trying to be, I'm calling the market top. I don't know anything. Okay. I couldn't tell you where stocks are to close 20 seconds from now, let alone in 2025. But the most important part is if you are active traders, know your levels, understand exactly what you're looking for, and understand the ramifications if those levels get hit. Guys, God bless everybody. Have a wonderful, wonderful weekend. And for all you guys who are joining this webinar, I look forward to working with you. Have a great, great weekend, guys. See you Monday.